I got two indicators here I'm running, and I have them both set to closing prices. And I got the 3-period RSI. 3-period why 3 is because I have no patience. So I'm looking for setups that are like 5 bars away from now, or it's right now, and I got to get in now because we're at the threshold of the entry of the indicator, and I also have the CCI 4-period but set to close instead of the high-low median bullshit where they smooth it out. So that being set up like that, we have the classic theory that if we are in an uptrend, we're looking for a more oversold at a higher price within 5 bars. So I'm going to switch this to bars so I can count the periods. I put candles up there. People understand candles. So in the entry technique of buying a pullback, there are 3 ways to get in. You're literally going to either pull the trigger at the end of the 12 period. This is a 12-hour chart. So MT5 is capable of the 12-hour chart. So this is like you're proving that the system works just in this one chart. You can see all the setups that you have to pull the trigger on the clock. After 12 hours, there is a setup. You need an order for that. And if there happens to be one that gets hit because you had your limit order set at the critical levels at the hot spots, to go the other way, because you have to accept the hot spot. You can't get around the conflict between. Okay, you can sit there and think that you're writing all these filters and algorithms to protect yourself that's allowing you to trade larger. I don't understand why you would. Apparently people are trying to find some holy grail system, and then you can just turn it on and walk away. If you had 20 kind of semi-good robots, 20 of them, you would make money. But the market will not phase in the way you think it's going to phase for maybe the next 10 months. It'll never get to the sweet spot where the indicators catch up and everything looks beautiful and it's a beautiful picture. Maybe you subconsciously are actually realizing that the market is at a double bottom. There has to be something processing where people say, oh, I'm making money. It's crazy. Yeah, because you're just buying low and selling high, and you really don't give a fuck. But the over dialing in, I guess the Fibonacci world saying that this thing is on a trajectory into Mother Nature, therefore it should fit into this golden ratio that everything's supposedly built upon, although there is the ratio within the weight ratio, which when you take it down to the nano world, now you get to the point where, where they would say measuring it fucks up the measurement. If you get so sensitive on, right, and this is where the spreads fluctuating, and you're trying to jump on, it's like jump rope, but it's going way too fast you have no technique for that speed or a way to place the limits in and hopefully get picked up on some spikeage into the hot spot, and that's your obvious first scalp, or you're going to be wrong and it's going to blow that out. But those are tight stops in that, and you could trade bigger, but now the spread's your problem because the bigger you go, the bigger the commissions, the bigger the spread. So that window that people are trying to avoid, the hot spot, whatever. Here's the British pound making new lows. And even the people that just trade candlestick doji breakouts, I guess I'm trying to say too much, but there's like a dumb shit trade out there called the market's not going anywhere. Just get the fuck in. Even if you're wrong about the direction, you have the potential of giant moves because the market hasn't done shit for like 12 hours. A complete gravestone in 12 hours says the market opened at the top of the day and at the bottom of the day it didn't do shit, and that something's going to go terribly wrong. What could possibly go wrong? If everybody's agreeing. Did you ever notice that? Your relationship with somebody so I've had this situation where if you're in a good mood when somebody comes home, they're like, what are you such a good mood about? Well, I didn't have to listen to you fucking talk to me and nag me. I mean, okay, there can be a point in some relationships where it's just like it's a rhetorical question. Hey, what are you in such a good mood about? Well, I'm not anymore. You're home. That does probably help. But the thing is, the market is abusive. If you have an idea that, oh, this relationship's great, like this is wonderful, look at us, and it runs out of sellers and you're short, and you're like, wait a minute, I think that I'm at the wrong party. Uh-oh, rah-rah. And then it comes all the way back the other way. And at this point, you're like, well, yeah, I guess I should have, because my rule says, wait a minute, checklist baseline. If it's going up, we could be in an uptrend here. Let me see if I get on my drawing tools. I kind of fucked up my recorder a little bit here. Let me get on my drawing tools and try to negotiate this. Okay, so yeah, we turned here. And now look at this amazing entry here. This dumb shit, 12 hours of nothing. Even the buy stop bots that just ran a dumb shit cancel replace are long this fucker for no other apparent reason than it's just now going up. I mean, the entry is the fucking confirmation. Do you really need a confirmation indicator for that? You're probably not even going to take that trade unless you realize the CCI is diverging into that and going, oh yeah, that's divergence. That is ahead of that. Here is your reversal. Come on. 1, 2, 3 period RSI reversal. How can you miss that? Well, easy. You're looking at candlesticks. Let's go back to the line chart. So take a look at this. Oh, I'm still in drawing mode. Please hold. So right here, check this shit out. I got to fix the scale. I am so sorry. I didn't prepare well for the class. There's gum under my desk too, please. Oh God, MT5, I'm just not used to it. All right, so we got to stretch this out to really get a true picture of the reality of the pivots and the structure of top become bottom and real price on top. And granted, we are running indicators here. I'm just saying indicators can be used if you know how to use them. You can't say RSI sucks when it has to be the most premium, cleanest fucking math in the world. It's an index of closing prices 3 days back, or here it's a day and a half back. There is no cleaner indicator than RSI. Now, if you can't perceive it, okay, well, maybe you've fall on your head as a kid, a boating accident. How can you miss it, right? Here's the triple reversal. Now, even the 5-period RSI is going to give you this entry. Bang, bang, bong. And I'm thinking this is going to be 0, 1, 2, 3 period. 0, 1, 2, 3 period. 4 period. So one more leg down. A deeper reversal. More oversold, higher price. Qualifies. Plus we have a structure. We have the top becoming bottom. I kind of almost bet you it wicked into this doji, which is, it just means that it's very small move. All these baby moves they're either a hammer or a doji. I mean, we're talking about, there could be 2 dojis there because this is close to close, which would be, in candlesticks, it'd be open to close, and it doesn't really gap in forex. Maybe on Sunday. And even here, we know that if we were in some dumb shit EMA 20 baseline world, why doesn't the no-nonsense guy just go, dude, here, let me show you something. Okay, it's in an uptrend. Every time below 100, we just pull the trigger. Buy, buy, buy. Look, it went up. Sell, 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 sell. Oh, we built a position to go down. It's going down. But I don't know if he's building positions. It just seems like the logical thing to do is do what the market's telling you to do. It's oversold. Okay, maybe it's not done going down. And here, if we would have had a 6-hour chart or 8-hour chart, I bet we would get a reversal here. So another thing is syncing the time frames in MT5. You've got the 8-hour, the 12-hour, the 6, the 4, the 3, the 2. You can also put up the candlesticks and perceive how many pips can the market move in 2 hours. Then you write a script where the market buys that deep in 2 hours, and what is the average rate of sell-off over the past 10 years in the euro dollar on a 2-hour chart. Okay, you could probably do some math and say, oh, it's 22 pips. But it's better to think about if it just dropped 2 hours, the last 2 hours, what is the continuation of that? What is the 4-hour rate? If we're dropping at 50 pips every hour, where could we be in 24 hours? It may look dramatic when the market makes a fast move, but it's typically the place people are getting the fuck in and getting the fuck out. People are like, I'm out. Dude, this is like the royal flush. The market doesn't trend 100% of the time. So 80% is consolidation, which is represented by bullshit like this. And then, well, this is actually a nice smooth move here. But the distribution phase up here is brutal. People are range trading that. That's a 12-hour chart. People can range trade that. They go, I'm buying the pullback here. It's going up. Even the trend traders that know when the getting's good. Like you could trend trade this. Here's the reversal in CCI 4-period close. Here's the 3-period. Here is the setup. More oversold, higher price. We got a top become a bottom. Now, if every 12 hours you pull the trigger, you bought one at the market, you bought another at the market. Because it's down. You're not going to buy this. It's up. At the end of 12 hours, it's up. This is the simplest filters in the fucking world, man. Nobody wants to think it's this easy because the problem now is like, okay, well, now I'd have to actually pull a trigger and be like, oh, I'm going to get in here. I'm going to then I got to know when I got to get out. Buying here and riding it from here to here, it makes no sense. If you can't perceive that there's sellers above this mountaintop willing to pull it back into the valley, then you've never looked at a chart. And certainly not on closing prices, which is as clean as it fucking gets. That's why RSI rules. I don't understand why this guy wants to put all this bullshit on there. Look at 1,000 fucking indicators. Dude, you can slice this everything to Tuesday with all sorts of condiments. You cannot put lips on a pig or whatever. You can't, dude, you cannot dress up anything here. And stuff like this is what, now look at this subtle sell signal. I just realized CCI is very sensitive. And at 4, here's your reversal. More overbought, lower price, although it's the very end of the trend. And those do come near the end of the trend. So when you see this price pulse, trend trader entry, you got to know when to get the fuck out of that thing. Just scalp out along the way, because how are you people surviving these fucking ridiculous over-filtered indicator-based systems that you're writing in this holy grail mindset of 91,000 subscribers last time I looked at this no-nonsense guy? I'm like, holy fuck me. Are you kidding me? Dude, you should have robots crunching that on your Dell rack mount 40-core ice-cooled computer, because, dude, the markets are constantly evolving. Just because you think you wrote an algo that survived the last 4 years in backtesting. But the no-nonsense guy is obviously getting a salary paycheck on some end of this, because you could never do it like that. Getting like, you got to be in so big on that trade with so light leverage, right? You just one-on-one leverage. At that point, you're really doing YouTube at that point? Yeah, maybe. I mean, I guess if you're super eccentric, you're going to do YouTube regardless how much money you got. You're just going to do it because it's a hoot, right? You just fucking broadcast your fucking nonsense. But I'm just noticing this structure here too. So we have the top become a bottom, and how does this? I'm going to jump topics again. How does this top become a bottom look in the RSI world? You don't really see it, you know. I guess you could say, no, I don't see any setups there. So here is the first sell from a trend trader standpoint. It's very technical. This is slightly down, so this is slightly more overbought. CCI is not giving you that signal. So no confirmation here. If you're looking for double indicator confirmation, so here you're filtering it out. So, I might take this divergence, but, no divergence in RSI, so this is a good a single confirmation, okay, just trade 1K here, and when you see a double confirmation, trade 2K. You should at least layer your confirmations, so every time you get another confirmation from another algo. So the latest no-nonsense question comes from some guy from Germany. And this guy is like, yeah, you Germans are pretty smart. And then he goes, yeah, man, like, guy in Germany's like, well, dude, man, bro, what if I stack the algos, you know? Can I do them like crazy? Like, I got 2 good algos. No, nonsense is like, well, I prefer to have like one hot babe. I don't want like a bunch of tramps around me. You got to believe these people really trade like that. Like, Akil Stokes isn't going to go like on a scalping bender, not even on a demo. Here, let me go check. Let me see this fucking guppy. Give me that fucking. Here, come here, you fucking. I get 50 pip stops. Come here. It's like playing like with rockets, you know. Some guy's just lobbing hot bottle rockets at you. Anyways, but here's another example of triple divergence. Triple divergence. And closing price is obvious as fuck. How do you make money from that trade? How would you do it? I can already say how I would do it from a limit standpoint. I always have limits above here, just for kicks, just in case this is a top. You know, because it looks like a top. The idea that you have this, you're in so big on this fucking trade that you got to stop like here, and you're like, dude, I'm only risking 2% of my account. What are you fucking nuts? Do you think the market knows you're risking 2% of your account? If you don't have your tickets based on the terrain you see, you fucking have no business being in there. Why are you bothering? Also, do you think you'd be awake 24 hours a day to catch these setups? I mean, a 12-hour chart, if you can't get to the 12-hour chart, I guess, right, you're in trouble. So this is doable. And I don't know scripts for MT5, but yeah, MT5 from an analyst standpoint, if you don't mind this, and of course, if you are trading 28 pairs this guy's trading. Okay, on the 12-hour chart, sure. Because then you're going to get, if you just have RSI only, you know, fuck CCI if you can't handle it. But like I said, I thought about CCI in RSI terms, and I just set the 4 period to close, which gives me this RSI-esque thing. It also gives me this nice divergence here, which is an interesting signal to get divergence here and also get a reversal here. And I don't know if this is, I may call that a compound signal or a compound confirmation, because it is such a rare situation momentum-wise, and it really says, oh, you know, there's divergence here just on this last price pulse. And you could say this is the divergence that caused that move, because this is the double bottom slightly lower. And the CCI is so sensitive that this is the first divergence here that kind of caused that little baby rally. RSI does not acknowledge that kind of lack of momentum like that for some reason, even though I have it set to close. But it has this math where this is 0 line in the middle, and we could change the color of that. And you can make, okay, you can make rules for, oh, cross 0, I'm getting in. Okay, I get that, right? You could be a chaser. You could be a chubby chaser. It's happened, okay? But wouldn't you want to just be a man for all seasons? Like, okay, if you had to, if your life depended on it, maybe you have to go gay or something, right? You're in a prison. Like, right, you show the guy I trade forex, he stops banging your ass or something. God knows what you have to tolerate. Here's another setup that's happening right now. I would say this looks like another buy, because the CCI is pulling back. And it is inverted to the close right now. So you can see how that is a very sensitive, way more sensitive, I think, than RSI, because this thing slams around. We go from minus 100 to plus 100 and keep whipping through the 50 line, which RSI is not making it through the 50 line even close. And if you're really aggressive with your indicators, I say CCI on close, just because it allows you to trade a line chart. And you could say, you could go CCI 3, which is pretty brutal. It's literally an on and off switch. I mean, I don't think it even, I got set it to 3 here just for kicks. But no, I trust me. I joke around. I say bad things about, well, indicators, I guess, across the board. You either love them or you hate them. But I'm saying what it is it's a filter of momentum in this instance. So I studied them extensively. I've tried all the settings. I've, you know, the tighter the setting, in my mind, the easier it is to get clarity. Now, CCI at 3, now just hold on, because this is going to be like an on and off switch. But I honestly think that if you are, okay, Alexander Elder is using a 13 EMA baseline. I'm assuming baseline means this idea of a trend. And so if you took reversals from CCI with a 13 EMA or an 8-period EMA, or the cloud, my 3-period, 4-period cloud, it's very, very tight. You're running like 5-period moving averages. You're getting signals like, we go long now, we go short. Now here we don't get the divergence that I saw in the other collapse. So just by changing CCI to 3, now we're getting the same reversals out of RSIs we're getting out of CCI. But notice how CCI just slams to 100 and just literally pegged down the ceiling at 100. Also, when you set the settings at 3 like that, it allows you to you don't have to use up a lot of real estate to see the binary nature of this momentum index. Closing prices, really. Otherwise, you really can't even keep a track what's going on here. If I turn the candles on, it's just too much information, in my opinion, because now I just see trades that are based on volatility, open to close entries. My whole brain cannot, I can't, unless I have apples to apples, I'm just never going to make it in trading. So I noticed that the bar chart is better than the candlestick chart because now it emphasizes the breakout of the high and low of the wick. Let me get rid of this grid. So to me, these are critical things because it may be a placebo effect, but your view of what you can tolerate, even color-wise on this. I'm trying to turn the grid off, but it's in a different spot. Okay, so, this perception of what is a narrow range. And I don't have any indicators on here, so I can't really tell you how many pips these are, but I know that if I go to the 4-hour chart, the breakouts are more often, but they're cheaper as far as finding out if you're right or wrong about the breakout. And here's another instance of the vacuum under the floor, I call it, which is easily perceived by bar chart only because you don't have this distraction about open to close bullshit. So here you get this is the floor, and we get this hole under the floor, and we also get narrow range. So like the breakout bots, they're on this, plus the bear protection team that has the trailing stops, they are triggered, which fuels that move to some degree. Plus we have the people that love to buy this new low as far as they can get it to go. The deeper the better, but the first scalp was here, as it typically is. People that are willing to buy this first plunge, and maybe they bought the whole plunge and they scalp partially back to, I suppose this would be considered the floor, and certainly this is the floor, and we don't quite make it back there. And once again, the confirmation bears come in with their sell stops. They get filled right here. And also, who's also in on this trade is the low pip risk people are really in heavy, because you can see they come in when it's dead on the 12-hour, and they're like, oh yeah, that's what we like. That's how we like it. We roll just like that. And here's another vacuum under the floor here, just like this one. But this is one further down the ladder of smash down. But it's also the as all markets make new lows for the week or for the month or the year or whatever have you, and they start to cut into this property down here and just make this new fresh cut, and then the inevitable retracement, plus the void left behind, which the market seems to have a need to fill. It's amazing how not only does it fill it, but it overshoots the runway. And typically that is because we've gone below here, and then not only did you run out of sellers, but you only spend one day in this amazing price, and then, comes back. The scalpers get out, and then this is the moment of truth. This candle here, which is the smallest bar. The smallest bar, after this one's untradeable, it could be a breakout strategy, but you know you're risking more if you do a real technical, true blockhead goober entry. You have a sell stop here, buy stop here, and you just let it go. Okay, I would say anybody that has never traded forex or wants to open a demo account and do a dumb shit strategy, which you in this instance here, where you put a buy stop here, a sell stop here, you do not get filled on your sell stop, although this is not a great run. And this is like a long time to get paid. Also, you would have to include your sell limits at the wicks. You got to have buy limits at these wicks here. All the way down. Here is the deep discount notch. And of course, dead cat bounce there. Not a great trade, but you're running on top of your limit entries. You need to get into this is a day and a half of, like 2 days of nothing, 2.5 days of nothing. This is a triangle, a flag, a pennant, whatever have you. And so if you are going to trade a break out of that, you're never going to get filled on the north side. You don't get filled here. You get your best fill here at the smallest 12-hour bar. It's pretty subtle. Now, you'd have to religiously go look at each 28 pair and go, okay, well, this strategy is going to suck on the 20th pair because the spread in Asia is going to suck, but it's a great fucking place to put you because it's low volatility, right? So here's the problem, is that if you start to run these strategies, and granted, this one is a winning trade, very kind of trapped a little bit here, and this, you could also say that this is where a lot of aggressive traders would buy. I would buy from here all the way down. So for me, this is the floor, and this is the hole under the floor, but it's also the hole, well, nearly pretty close to here. That's tight. And so getting in here like this, okay, I don't want to get in and buy stops, but I can see people are doing that. I want to have enough of a clue mentally to say, what can I do for the next? I can drop orders right now that last a week. And have buy limits, buy limit, buy limit. Okay, 3 tickets, move to the next currency pair. See what happens. Okay, we come in now. Also presupposes that this stop for this order is not right here, because what's the point? If this stop is where this entry is, then you're not building a position. You're just, well, you're really kind of slightly in. So what's better, Well, I guess how much money's in the account? Because I think it's better to have just below this order, like move this stop so that it's in between, maybe. So you can stack at least 2 tickets in there. So you're stacking. So you watch this Sean Lucas guy. So he's an aggressive trader, even though he's mellow, he's aggressive. So he's putting stacks of tickets in there, and he gets them pretty heavy. Like I watched him trade FOMC, and I was like, God, is that guy really trading that? Like he's just boom, boom, 10Ks, boom, 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 boom. I was like, dude, man, I mean, like that's crazy. But it peels them all off. Market comes smashing back. It's pretty relaxed, and I don't think he's even got stops on that shit. I don't pay attention, but so that's a different style trading. I mean, some people are gonna be meticulous. Oh, I backtested that for 3 years, dude. We're finally gonna trade that fucking thing. It's crazy. Here's the reason to get in on closing prices. Now you can't see them. This closed up here, and that's this signal to either put a sell stop in, low volatility, or sell at the market. I prefer to sell at the market at that point. If I'm here and I see that we're overbought, and this is almost the reversal from here, almost. if this would have been a bigger rally here. It's very hard to find these trades here on the... Also, don't forget, when you buy here, you're in with a lot of people that are buying there, and the breakout traders are getting filled there, and the scalpers are just... I would say that a lot of people, once it fills that vacuum there, this little pocket, once it's filled, a lot of people are like, I'm out. There's people that live inside this little notch. Look at this beautiful stop hunt. It comes in and carves out this one-day bottom, 12-hour chart, trapping the volatility breakout traders, trapping the divergence traders. Don't forget, people sold that, thinking, oh, that's divergence. Look at that. Somebody must have thought that. Even if they didn't, it's still one of these failed divergences, A classic failure of divergence, but it's a detour. This is divergence, right? Everybody sells. Hey, you know what? It's not done going up. So if you're scaling in 10 orders, you're ahead of the guy that's in one position with his Fibonacci Holy Grail, his overfiltered system. You're kicking his ass. If you think you're up against other people, you're just up against yourself and the frequency of trading to the size you're trading. So if you trade less frequently, you could trade bigger. Because but you have to survive bigger drawdowns, right? You're getting on one giant horse and assuming the pace he's going to go. You can survive the pace, the ride. He might take you where you're going, but you want to get there in one piece. If you just trade 2Ks, right? You got to make it work. Trading's work. You can't just design one big fat car for everybody and be like, people that do that, don't they pigeonhole themselves? Well, I guess if you do it in a way that it's a one-of-a-kind car, but if you go mass production, people are like, I like that, but God, is that really it? Maybe that's your edge, right? But then how often does that take off and be... It's better to have something that a poor guy can afford and a rich guy can afford. If you're trying to sell something, okay, I got something for rich people, custom made, and I've got this just hackney shit that I've just copied my designs and just done posters of it. Signed poster bullshit. And he's got a name. I went to this art store, this art gallery once, and I said, what does it take to get my shit in here? They go, who are you? I'm like, oh, I guess I get it. So your artwork could be the most prettiest shit in the world, dude. If you don't have a name, people are like, and you're from... It's so funny because that shows you that's like Fibonacci. Let me see your Fibonacci's. No, I don't think that's going to work for... and really, I tried to look for a Fibonacci video tonight. Couldn't somebody please tell me? Oh, I did find this one talking about it, but they were just talking about it using it as a pullback device. But this ultra precision, this Garley stuff, the harmonic trading, like really, shouldn't you just get that 8-ball shit out and be looking for stuff in there? Yeah, just use 3-period RSI on closing prices. Look for divergence, look for reversals, look for tops and bottoms, look for overbought, oversold. At the market, if you turn on the bars, now I'm thinking, wow, volatility does matter. Look at that. Now, if I turn the candles on, I think, oh, shit. If I turn the candles on, I think to myself, wow, open to close matters. Like, this makes time more important. There's more time in a candlestick. There's a bigger display of time because it's also giving you this instant bullish bearish flip switch bullshit. Who's in control, the bulls or the bears? Of course, it's after the fact, right? Oh, they're in control now, but then what? And how would you get on the Southern gravy train? And just the simplest, I'm still blown away that the no-nonsense guy hasn't come to the reality that less is more. Dude, it's a Zen trading's a Zen situation. How are you putting on so many psychotic, well, I can't even show you my algorithm, it's so fucking complicated. Dude, there's no secrets here. We can all see the same data. I just don't get it. Really? Who's not selling their gold right now? Going, dude, I just need cash. I gotta get laid. I mean, they're like, dude, it's climaxed. People are getting the fuck. Bitcoin's going sideways because, yeah, people are like, dude, are you kidding me? Wow, I never thought I'd see that. I thought I fucking lost my whole. People are probably getting remarried and shit. Oh, yeah, my fucking girlfriend left me for the Bitcoin. Now she loves me to death all over again. But who knows? That could range. Like, if you don't have a trade plan for a $5,000 move in Bitcoin, then, yeah, you didn't write the script, or, yeah, you didn't draw out the trade plan, or, yeah, you didn't have the money in the account at the right time, and now you're chasing it. Or you've fallen under this notion, which I guess, once you've lost real money and blown up fake money and realized that the past does not equal the future as far as what's capable in volatility terms, and is as good as things can be or stable as things may look, they could always get crazy. Up and down. Imagine gold going down to 500 an ounce. Imagine it going up to 5,000 an ounce. I mean, what kind of world would we be in? So maybe you're seeing that right now. If you look at palladium, at 1,500 an ounce, nearly right around 15. You're like, wow, that's never before. We're living in historical times there, and the S&P, just as you would know, it's just going to keep invading that northern spot, I suppose. We made new highs and all that bullshit. We knew we would. It's just that, was there a trade on the 8-hour chart? Okay, well, yeah, but not 8 hours into the week. Maybe it's 12 and a half hours into the week on the 8-hour chart, and the 4-hour chart cues up to the 6-hour chart, and you're like, yeah, I can see what's going on here. And you can kind of see when the train's leaving the station on the 15 that if you don't get on now, well, we're about to invade the weekly charts, and we're going to start taking out wicks that are 2.5 years old wicks, and now we're going after a 5-year wick on the monthly. I mean, when that's happening, get the fuck out of the way, because you're going into a hole that potentially could just go crush and go psycho. We just go fucking parabolic into a hole. I mean, the setup's obvious. The market comes down here. Tools are all lagging. Market comes dripping down, 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 down. Then rips up. I mean, this is hard. This is 12 hours, 12 hours. Because this pent-up wedge of demand has got to be filled right now. There is like, it's like you run out of toilet paper in the bathroom. People got to bring some reels in, But it's the retail flush trade. We all know that one. Anybody that understands level 2 trading would understand that shit. It is, and if you bought here with a stop too tight, yeah, okay. Look at this beautiful quadruple banging, knocking on hell's door, right? Then it's knocking on heaven's door. Now here's the reversal. Very dramatic. Here, not so much. Here is a double bottom you're getting in. I know I'm jumping around, but I don't care. I'm not charging. So here's another reversal that pops out, which you don't quite get it in RSI. And here, a lot of people are getting in because the market's very, very quiet. This is hypersensitive to any bullish or bearish movement. I don't think I would ever approach this indicator with the mindset of, well, we crossed over the zero, let's go long. Well, we crossed over the zero, let's go short. Maybe. Because it's so fucking ahead of the market, but I kind of like the idea of buying here, and then here's divergence against this last thing. But then I'm still going to be trading this trade plan on top of it. I'm never going to unsee that now. As much as you may want to have radar systems and indicators and scanners and this algo, and you built this and you did that, and I bet, this trade here is something that all the algo is going to get in on that. That's an insane entry. That is just where people are. And you've got this big trailing protection that the bears are running, and as soon as that gets tripped, it just fuels that thing. And after we've been here, another thing I think that is true about the market is that after we've been through this drama, okay, this is like in a relationship. If you threw a plate at me and you missed me, okay, I still remember that you threw a plate at me. And so this area, this is charted water in our relationship. This is not. This is when you hit me with the plate and I throw it back a little bit. Also, because you have attempted to hit me with a plate here, that as we drip through this bottom and here, that it kind of drips in. It does a nice a last whoosh here. And I think that's because of this cleft here where there is quite a bit of deep supply. That's the wedge. You typically would go whooshing through that, okay, because right, and there's a floor here. So there's a lot of impetus for this kind of kablamo. But then here's where you hit me with the plate. Come back, I throw a fragment back at you, and then more plunge, and then fuck you. Now, let's go after this bitch. And now all of this becomes an issue now to be cleaned out. That's my unhumble opinion of price action. Or lack of action to action. Action, it's not just price action, it's lack of price action to overpriced action. And I can also take, because these are 3-period indicators, now I can save some screen space. Do you really need to see MACD? It blows my mind. I just want to kill myself. When I see MACD, I just get impatient. I already am starting to want like a hit of Ritalin or something, whatever you take for that. I'm like, you got to hook me up, man, because if I got to look at that MACD just creeping along at 26, 12, 9, I'm just going to fucking get a goddamn... I'll use a bump stop to kill myself. Okay. Okay, so take a look at what else did I want to... Oh, I want to switch time frames. So here we are on the 12. I'm going to jump to the 8, which is as tight as we can go. Also, I did not measure this pip drop. Sorry. Okay, so I got a little off topic there, but here's the thing. If the market's dropping here at... Okay, so what? How many pips? Okay, I guess I'm not used to looking at this gauge. Is it 20? No, that's not right. Okay, so do we drop 70? I'm going to go open to close 76 pips, 12 hours. And you put in a 12-hour script that's this deep. You're asking, can we keep up that rate of change? So at the end of 12 hours, you're going to put a 12-hour script in. Would you get filled? Not really here. So you'd have to put in a script that lasts maybe all day. So it's going to, you know what? Maybe all week. Because if at the end of the day, you come into this next day, so the weekly is going to look like something insane like this. So you're buying this whole area. Well, the market's capable of dropping at that rate. Like this is, okay, for a trend trader, so to speak, if they get in here before the final plunge, right, this is their shoulder entry. Even somebody that trades archaic shit like a head and shoulders pattern. All this shit's, it works if you are willing to put the trade on, I suppose. Because you could say, this is the shoulder, this is the shoulder. Okay, well, this shoulder failed, therefore negated the pattern, I'm not going to get in. You can't be like that. Dude, you're never going to get laid. You can't be that fucking picky. I don't get it. Like, you can't dial shit in like that. If you're going to get in 3 tickets, which is better than 1, give yourself some room for fuck up, man. What's this? You got 20 filters. You got confirmation. It closed up. I get in. Okay, you made a little bit of money. Oh, wow. Oof. You sold here. Yeah, you waited long enough. It finally went down. Okay, right. I got it. I see all those trades. I still don't see people on this other guy that was the no-nonsense fan. He's doing these things where he's back testing this shit. He's not even talking about, like, how to get in this thing, where to get out, how big is he in. He's just like, see, this is an entry. I'm like, yeah, but you're fucking cherry picking the fuck out of this thing, dude. You have to really be realistic. You can't just trade one technique. Okay, so if you really want to make a lot of money or survive what's coming. So I'm not into conspiracy shit, but I think there's volatility around the corner. It's going to be crazy. Like, if Bitcoin takes out the highs, people are going to shit their pants. It'll be the leading market on the planet. It's hard to believe, right? But it may speak for people's sanity, right? People are giving value to something that really technically has no intrinsic value. In other words, you can't melt it down. You can't make like nothing out of it. In other words, it's not a 3D object. It's a ledger. It's real estate, I suppose. Real estate on paper. Right? You're occupying a file that's unique. Okay, that could be a thing. It's not like licking ice cream in the store quite, but it could be a thing. Now, here is like a 3-day sell-off. You know, did you take that trade? Was that a good trade? Oh yeah, I could show you so many trades in here, but they're all at a different pace. Was this a good trade at this rate of change? Are you willing to wait this long to get paid on this many pips? Is this a good entry? I drew a trend line on even a trend line on the fucking Wix. I had a goddamn channel running. If I just drew trend lines, could I make money? Sure, why not? On the Wix, my first chance to draw trend lines here. Okay, poked through a little bit, but I took this sell here. We came and touched it. Could I wait this long to get paid? Did I squeeze every ounce and wait for them to make new lows here and cash out? Did I reverse there? I should have. No, because I had a bias. I was bearish. Dude, I'm a trend trader. Get the fuck out of here. Who is this fuck? Well, 80% of the market's ranging, so why don't you just sell, buy, sell, buy, sell? Yeah, because, dude, I'm waiting for this move. What, are you retarded? And of course, if like this is untradeable if the spread's really wide. I mean, this is a British pound. This looks like a nice healthy move. I'm thinking like 50 pips because I think this was 70. I said. So this is like, these are chunky moves. You know, this is brutal. Why are people losing money when the market's like this? Because people are getting like, oh, I see a sell, I see a buy, and they're like, holy shit, they just stopped somebody out, and they just, yeah, maybe you got to sell, maybe you're long in here accumulating, you got a sell stop here, I'm going to stop you out, okay, you lost. The guy that sold here trailed his stop, and he got stopped out. Maybe some confirmation guy has sell stops stacked up here, and he has, which you couldn't blame him, buy stops here, sell stops here. He gets trapped on the longs. He doesn't double up and go the other way. He's like, no, I'm sticking to my guns. Look at my strategy. It's so easy to see on here how people could get totally annihilated, end up at no-nonsense forex. Understandable. I think it's just because you misunderstand how the indicators are built. You know, running the line chart with the closing prices reveals the derivation of the math, how we even get to this so-called indicator filter world. Or we could just, okay, if I was showing this to somebody that's never traded, I would never show them an indicator. Because there's too much anticipation, or there could be too much anticipation about the indicator and waiting for your indicators to catch up. I don't think the market waits for anybody, and I don't think it can see 2% risk of your account. You just have to say, I'm putting this trade on, it's X cost, and yeah, I know I'm probably going to get killed. I'm going to lose 10% from shitty trades, but if I'm getting the sweet spot of entry to time exposure. So if I have weekly orders in there, I got to have enough money to account for the weeklies if I'm going to scalp on top of those. You can't deny the reality that it takes money to pull the trigger or to even have a trap set out there. That takes money. And you're going to get stopped out of your conservative trades. So being conservative, okay, so it's paradox, right? But overly conservative, you're just going to keep stopped out of shit. And it means you got to just trade smaller and wider, 50 pips stop on a 1K. So you're risking $5 a trade and you're like, okay, I got $5 in the account. So you're going to need to prepare for what each one costs you. Now, you could also trade against yourself, which I think is psychologically demanding, but you're really trading against yourself when you get out of a trade too early already, and this is how you make money, is getting out of a trade too early, because you need to pad your account for the times you're getting in too late or way too early. Getting in too early is worse than getting out too early, because you're making money on the one you got out too early on. So a lot of these things that people say let your profits run would just be incompatible with swing trading, because you're really if you're looking to accumulate a position, you're looking to get kind of pounded. Okay, you could have scalped up 20% of that position off, and that's what it becomes instead of 50% of the position, which is such a blockhead way to think about it. But I'm just talking about working hard and risking less, because if you work 3 times as hard, you don't have to risk 3 times as much money. It's not that hard. What you're doing is just, it's going to take the same amount of time to put a buy limit here. Like say you just look at this chart and you go, you know what I'm going to do? I'm just going to put a buy limit here, buy limit there, walk away. And you may not get filled, and you're like, wow, that was cool. That wasn't as scary as I thought, And maybe it does plunge down here next week, and they do get in at that price. And you're like, yeah, I knew they were going down there. Now that is no different than an empowered trading setup where these fuckers get out this harmonic bullshit to make the excuse to buy down here. You're just justifying, oh, I like blue dresses, it's crazy, I'm Bill Clinton. You're rationalizing trading. You're gambling. You don't fucking know shit about that. There's no way the market can see your harmonic pattern or your fucking Renko or any of that shit. RSI, it doesn't see shit. It just sees this. Wow. What happens if we get below here? Do we keep tanking? And if that happens, you're like, holy shit, we must be taking out stuff that is psychotic on the left side of us. I was going to put market profile in here, but I'll do a different video of how to use market profile. I think the way to really do it is you got to figure out in any of these scenarios, what is your, I hate to call it a baseline, but what is your frame line? How much data are you willing to look at before you judge the situation? If we zoom in, wrong key. If we zoom in to this chart, how does it not change your perspective of reality of the data? It's almost, some of these trades are imperceptible. If I was to go like this, and I've seen, this is another reason why people don't do it like this, because they're looking at so much fucking data that they're looking at it like this, I think. They're like, oh yeah, man, but you zoomed in too far. You can't see the landscape here. MT5's got a weird thing where it doesn't auto. The charts don't move around very well on MT5. Let me tell you. Look, now it's bringing the data in now. It's some data saving device in MT5. Okay, MT5's got issues, people. Just saying. It's ridiculous. Okay, this is when MT5 is ridiculous. It's got to feed in the data. This view is completely different. As you can see, I hate to sound like no nonsense. As you can clearly see, I should put up a face of some disgruntled bitch. Some blurry fucking thumbnail. Where does he get this shit? This guy's from another world. Actually, when you go here, it's just a bar chart. To MT5, it's a bar chart, or MT4. Okay, so people have a chart like this because they're like, yeah, well, wait a minute. Go to the daily. Fuck, daily's up here. Go to the daily. Wait for the data to come in. Wow, look at this world. So, this is an insane area down here. This wick is insane. Come on. Look at that wick. Now, I don't know if that Dante guy's watching. I can't log back into my Twitter thing, but I know that he would understand that if you put a buy limit here and a buy limit here, and this is the British pound, and a buy limit here, and you walk away from that trade, and as the market starts to go down and you're watching this real time, you're probably, there's a part of you that wants to pull these tickets out going, no, this thing's going to hell. Like, it seems like that. Even here, if you put buy limits in this pocket on the daily, and this guy claims he trades the daily, the no-nonsense guy. Dude, don't you see these fucking setups? Even here, if you committed to buying here all the way to fucking Memphis, and you had buy limits down here, you can't tell me that in one fucking day, you didn't just clean up and engulf your bad fucking entry. You cannot tell me that trade. And what is the cause and effect relationship here? Well, there's a cause up here called this hole left behind, which is the immediate cause. It has to be. This is the floor. This is the vacuum under the floor. And you're going down this thing like and here are those. It's a perfect storm. You got the money management bears running their sell stops. You got a vacuum under the floor. You just went into this territory. Are you kidding me? And this thing comes gushing back, all pissed off. Blows through the floor. In 2 days, it annihilates that shit. I don't know if you can see that. I'm really zoomed in. But when I see stuff like that, I go, holy shit. There's your fucking back test. See this hole? See that raid? You got to buy this. You don't need a Gartley for that. You don't. This triple bottom's blown out. They trap them. Here's the vac. Oof. That's a fucking quick and dirty trade. Well, you know what? Here's a microcosm of it. A nanocosm. Come back, hit that wick. Now, this is not as ripping, but that's a nice move. And what is the reaction on this rooftop? Fill it, kill it. It's the fill-kill zone. But there's these little subtle ones, like here, just 1 pip higher. On the 4-hour chart, this looks exquisite. I'm sure in here on the 4-hour, the 8-hour, the 6-hour, the 12-hour chart, you're like, oh, I get it. I see what you're saying. Look at this tree trimming. And then not only does it come back, the scalpers make their money, but this bitch just keeps pounding this vacuum left behind. Here's your Gartley. People can't even read Gartleys right. Dude, here's the Gartley. It's this hole. See it? I call it the vacuum harmonic. That's it. It's actually the reptilian trade. I did a video about this pattern. This is the back of the reptile. This is the head of the reptile. Yeah, the guy that was asking about the Cuban sandwich, you got to look up hedge fund manager blows up account. See, I think this structure is too old here. This bottom becoming a top. You can make that argument, but what I think is really going on there. So I thought about this. It's this top here, and this wedge. Once it fills that wedge, I hope this is legible what I'm talking about. But this curved rooftop, this slope, whoosh, and then we have this. So it is a beautiful range trade. Either trend trade it. Okay, so you could either sell this for that, or you could buy this for that. And to me, that is a quick and dirty trade. These it comes back, it wicks into this, takes out a 3-day low, and then rips north. Wow, that is probably a news event. And all of these, if we had the clothesline, I think I can switch gears. So if I go like this and do clothesline and draw my stuff and then look at where the bodies are. So here's the clothesline floor. Oh shit. Okay. And here you fall below, and here's that vacuum underneath. But when it's closing below here, people are like, holy shit, I'm buying. If I can buy below close in this hole, I'm like, oh yes, I locked that in. And I see it go up. I really don't want to chase that. Like, I really hope I put some limits in also, and then I'm like nailing that going, yeah, like that. It could have wicked here. I don't know. I can't see it here. But you can never underestimate, if you do the wax on wax off exercise where you put line charts up and then you see, well, did we wick down there or not? Like, would that have been a good trade? So if you have sell limits up here at the tops, is it also a good trade that it wicked up into some limits there? When this pulled back and closed below this, was that a good entry? Here you didn't. I think this is like, you could say, a top become a bottom here. Because you can see all the trades on the line chart just jump out at you. Also, you can probably see that this is going to be a RSI reversal where it's probably more overbought. Without looking at RSI now, you can kind of just tell. Plus, you have a double bottom become a double top on the daily. Like, do you really need to get indicators on this shit? I think the no nonsense guy, since he can't see divergence, he's blind to the subtleties of this story, this narrative of price and the way it coils up. And I remember seeing the coil trade in a book, and I thought, that's cool. The coil, but how big's the coil, and how many winds on the coil? So a coil trade could be 7 zigzags. You're like, dude, which zigzag do I get in? And you're making it harder. People want a clean answer to shit. So if you told somebody, well, and of course, if you really are trying to figure it out all at once, you just want a simple answer. Well, just tell me, dude, is it this way? Well, no, it's all contextual. Plus, it's all situational. So you really can't have a blanket answer. You'd have to say, well, is it sunny out? Like, there's certain things you don't want to do if it's dark out, unless you got some insane lighting scheme, right? You're running the big lights. And that stuff's unavailable, And so if you're not going to trade these quiet markets and you do want to trade the breakouts, well, you have way long time. Well, 5 hours to get filled on a ticket, or 12 hours, or 12 weeks, I don't know. Or 12 weeks for your algo to spit out a fucking trade out of your goddamn uniblab. It's a harebrained notion. I'm just going to say it's harebrained. If you need an excuse to buy this currency, after we come underneath this floor with an indicator such as, I had this person watch that. It was pretty funny. Okay. Some people in the United States, such as, I want to get in here on the first reversal in RSI or CCI. It's right here. Right. This is more oversold. It's kind of sloppy, but this is the daily chart. We go the weekly, it's probably nice and clean. I don't know. It doesn't matter. Like, even if you're trying to buy, another thing is CCI at 3, you got to pull the trigger here. You're at your buy. Okay, it's binary trading on this fucker. You're going to buy, you're going to sell, you're going to buy, you're going to sell, you're going to buy, you're going to sell. So as you sell here with a 20 pip stop to make 40 pips, yeah, maybe you got stopped out of this, but you're making it, or hopefully you got the 15 pip stop to make 45, the 20 to make 60, whatever have you. And you're going to pull that trigger religiously at the end of the day. Don't forget, that's when the no-nonsense guy gets in at the end of the day. So if it's above 0, I'm pulling the trigger if I think it's tanking. And what I'm suspecting is we're going to go after this area. So I'm already preparing for where we could go to, and this is not indicator-based. This hole does not show up on your algorithm. This is a hole Mother Nature is looking to fill, right? And like, having a trade plan to just do this to that has got to be the dumbest trade plan that makes the highest probability money. Right? Because now here you do take some punishment if you implement that trade plan here and you buy these new lows. When it crushes there, yeah, I don't know where the wick is on that, so it's not fair to say. But let's imagine we're trading with 200 pip stops. And we finally go to here in Gulf, and then here's the trend traders are buying every little micro pullback. Okay, so there's a trade plan for low risk trend traders. This is a trend. If I was a trend trader, I'd be like, we're in an uptrend, I'm going to buy the pullback. I get in, I get out one day. It's slightly up in a downtrend. I'm not using a moving average in my trend trading. It's going down. I'm looking for a rally to sell. Don't get one. Here I would sell. I would sell my trend trader. Not really, because it pulled back too hard. I'm not a low risk trend trader. Low risk trend trader goes, okay, little rally. Let's get in, sell. Let's get in, sell. Yeah. Okay, it's trending. Don't let anybody find out it's trending. It's going up. Don't buy. Wait for a baby pullback. Baby pullbacks we buy. We're along 3. Here's a baby pullback. The babier, the more we buy. Ooh, good buy here. And you're going to tell me, well, the 20 EMA guys are on that. They probably are. The 20 EMA guys are like, yeah, it's in an uptrend. We just bought that pullback too. Hell, everybody bought that. Even the stop hunters bought this. So, yeah, there's a bunch of... You see this trend is coming to an end because here's the shoulder. The head and shoulders is a real thing. It's conceptual because you're saying, I'm betting that that's the shoulder there. It's a good bet. But that's a shoulder. And we go down. And, of course, this is the continuation trade. It's called, so-called. Wave 4. Wave 2 entry. Wave 4 entry. Baby rally, sell. Baby rally, sell. And you're like, this is just going to keep tanking and retest this. And I'm sure that's the dream of the bears. Even this, you're up really hard. You buying that pullback? Well, yeah, why not? Look at, dude, we're in an uptrend. Look at my 20 EMA baseline. But they stopped you out. Did you have the mental flexibility to jump in and change your opinion on trend and say, well, that's a baby pullback and a downtrend. Can't you see the downtrend? No, dude. I'm using a 50 EMA. My downtrend's like this. Yeah, I don't see the downtrend, but you know what? ATR was too high here. I didn't get in. How aren't people seeing the fallacy of this crude algorithm approach to... Are you really picking up girls at the bar like that? Well, let me see. Could you just... Can I get a profile view? I want to see your Ranko. And then what I'd like to do is if you could step on the mat here, because I'm gonna get your BMI. And I want to compare it to everybody with your fib handles. And I want to see if you're in my horoscope range with... You know, come to think of it, no, hold that thought. I got a new algorithm. It involves volume. So I want you to take a big breath of air. Okay. Now, we're going to rescan you. We'll get back to you later. We're going to put you on the tickler file. You're one of 28 chicks I'm currently dating. And I don't date 2 girls of the same race because this is like, if you get into this thing where you're in currency pairs that are correlated... All right, can you see the problem? So what we'd like to do with you is, if you could just step into the mass plasmic spectrometer nanoscan, we'd like to see how we're using Lucas numbers, to be honest with you, better than Fibonacci. But I mean, seriously, are people really? Yes, they are, because... Like the no-nonsense guy says, where the popular kids hang out. Yeah, 90,000 subscribers to no-nonsense forex. I think people love the fact that he's consistently got bad intro music, consistently got uncreative thumbnails. People love that shit. Dude, just give me peanut butter and jelly. Don't fuck white bread, please. Don't fuck it up. Oh, dude, it's moldy. Come on. I can handle a little bit of discrepancy. So, I don't know. And then we get bored and we want to try new things. But I don't know if I'm helping anybody. It's just that I like to blather about what I know. And what I don't know is that I don't know the future, so I gave up on trying to project and forecast even the next 10 minutes. Well, in Asia, you can predict this. They're really not going anywhere. You'd be right about that. Tomorrow or next week, or how long is this going to keep going this direction, or and what can you do about it if it is going in that direction? Do you have a trade plan for something that just mechanical trading versus perceiving opportunity entries in insane price levels, right? Spike entry, random trading as opposed to mechanical breakout strategies where, okay, this is just a clunky trading thing and it works, I know it works. I think people want to get this, buy a car and try to improve the suspension. You can do all that shit, but until you change the wheelbase of that car, you're just kind of, the base physics aren't supportive of, you're going to have to try so hard on the suspension to get it to handle good because you just haven't got your center of gravity with the wheelbase set up. You'd have to do that first, right? Otherwise, you just end up with a motorcycle with really good suspension, but you can't just drift on a motorcycle. You have to have somebody on it. Do they have self-driving motorcycles yet? That I would love to see that. Like a hot neoprene chick, leather boots on a motorcycle, self-driving motorcycles. That's what we need to have. So if I run for president, I promise everybody that. So also, if you are living in this indicator world where you're looking at your dashboard to see how fast you're going and not looking at the people you're running over. And another thing with indicators, I've never looked at them when the market's open. I'm looking at the price. I'm looking at my equity. I'm looking, God, do I have any margin available for this next fucking trade? I'm just not looking. I had to be honest with myself at one point that I'm really not looking. I'm not trading the algorithm, so to speak, right? And building an algorithm and then trading it and